This article says AMC Entertainment possibly poised for a blockbuster earnings report. It goes on to say that AMC stock is a strong buy and, quote, technical analysis exhibits a pattern where the shares are poised to rally significantly. So if that's not enough, then I don't know what else is. We're going to talk about why AMC could possibly rally big in this upcoming week, or what it could look like if we have a bad week. This will be a price prediction for AMC stock. So welcome back to the channel, ladies and gentlemen. If you guys are new here, we cover everything AMC. We cover everything broad macro market events, news, anything that'll make you guys money. We cover it here on this channel. But before we dive into this information, remember to buy the dip, like the like button, subscribe to the channel, comment down below. What do you guys think about this upcoming week? This is the most important week of 2022. By far. By Friday, we will know if we are in a technical recession, if the earnings picture is going to hold up for 2022, and if the Fed is going to continue hiking rates at this aggressive pace throughout the rest of 2022. Well, because this is the last Fed meeting until September, so we do not have a Fed meeting in August, so this will give us clarity on all three of those fronts, and that will drive the markets going throughout the next couple of weeks and the next couple of months. So let's dive into it straight with this article. So this article says AMC Entertainment possibly poised for a blockbuster earnings report. And this guy, just so you guys know, has been a market analyst, a market technician, likes to use technical analysis for the last 17 years. So this guy's, I mean, if 10 years is considered an expert, I mean, you're pushing it, right? Now, the summary. The top 10 films are blowing out expectations. This is likely to drive better than expected revenue and earnings results, hence our strong buy rating. Seeking Alpha data shows 605% revenue growth and 61% EPS growth year over year. Persistence in theaters is impressive, with surprising surprising strength of ticket sales, which clearly includes substantial repeat viewings. Technical analysis exhibits a pattern where the shares are poised to rally significantly. That's pretty much what we've been saying here on this channel, and I just want to highlight that for you guys, that other people are saying this too, and that's probably why we're seeing such incredible bullish option activity, even on Friday when AMC stock dropped almost 9%, right? Take a look at the option activity that we were seeing, and we're going to call out a couple of these large orders. So right here, you have a July 29th, $13 call. This trade, the premium paid per contract was $2.57 per share, so $257, and this was almost a $500,000 trade. So somebody is betting that AMC stock will be above $15.57 per share by this upcoming Friday. So that would be a move higher. Now look at this one. January 19, 2024, $18 call, paying $6.25 of premium. That break even would be at about $24.55 per share, $125,000 order right there. But look at this one, January 20th, 2023, $25 call for $1.3 million. Why that is substantial is because, you know, January 2023 sounds like it's a long time away, but in the grand scope of reality, I mean, this contract is already 60% or more dead. I mean, you only have 4.5 months until the end of the year, until this contract essentially will expire, and that's a $1.3 million bet that AMC is going to go roughly 100% higher from here. Virtually all of these options are bullish, and we had a 95% positive order value on Friday, 12 orders totaling $2.32 million. Now, typically, if AMC stock is down 9%, you will not see this kind of bullish activity. That makes me more bullish, or at least an indicator that we could see more bullishness in this upcoming week with AMC stock. So I think that is the number one thing that I am certainly looking at, you know, heading into this week. And we do have calls. The total open interest for the call side expiring this Friday is 67.05%. Puts is sitting at 32.95%. If we take a look at the S&P 500, it's a completely opposite story. Traders are definitely betting that AMC stock is going to go higher by this Friday, whereas if you look at the broad markets by July 29th, it's came up a little bit, but the call open interest is only at 26.6%. The puts is at 73.4%. So a lot of people are betting that the broad markets could see some downside this week, but also betting that AMC stock is likely to see some substantial upside. So there you guys have that, and I think that is one of the most telling things, and that, like I said, is a strong indicator of what could be to come this week. Because let's face it, hedge funds, people that are making those trades that come up in the unusual option activity, you know, they're hedge funds. They're guys with a lot of money. These are not retail traders going out and putting $500,000 on a call position. It's just simply not. Now, if you look at the cost to borrow max, you have started to see the cost to borrow max spike that I've been talking about, and the cost to borrow average and cost to borrow minimums are holding up in between 8 and 10%, which is very good. And let's not, you know, forget that the S&P 500, for an example, which can be pretty volatile on a day-to-day basis, you know, up, down 2-3% is not uncommon for 2022. That cost to borrow rate is usually only about 2%. So the fact that AMC is holding up a hell of a lot higher than that, cost to borrow max at 22.65% is still very, very high. But I do expect this week you will see that cost to borrow ramp that we didn't get last week, that I really thought we were going to get. So there you guys have that. Those are the cost to borrow numbers. The dollar amount of shares that is currently sold short is worth $1.65 billion. Short interest has went up about 1% over the last 7 days, now sitting at 18.8%. Free flow out on loan 27.65%. Shares out on loan 142.53 million. Days to cover 3.4. Cost to borrow of 10.17 and 100% share utilization. So all of this, you know, pretty bullish in my personal opinion. You got to take the short interest with a grain of salt, because the last settlement day we got was June 30th, and you could see the short interest of free float was 19.67%. Add in there synthetic shares, add in, you know, all of the market maker shorts that are out on the markets for the option activity and for even the FTDs, and you're looking at a short interest that is, you know, much higher than that. Let's just be honest here. And just so you guys know, the you know, monthly amount, and I know people were like, it's not, you know, it's more like a running total, right? And last time I made the video, people were getting very upset about the way that I put out the data, but that's the way to look at it. You know, you had over 30 million FTDs throughout the month of June. Either way you hash it down, there's millions of shares that still need to be bought back just in the FTDs, because they have 35 days. So if their 35 days is probably coming close to that point where they have to start buying shares back if they had FTDs throughout the month of June. You got to remember, these guys, they don't like to buy back their FTDs. That's like you took your profits, but yet you have to go put some of those profits back in and go buy shares. People don't like to do that. Hedge funds, market makers, nobody wants to do that. So they like to drag it out as much as possible, especially in this market environment where potentially the stock could go down a lot, and then they can make that difference, make that spread again. So keep all of that in mind. That is what you guys need to know. As far as the events for this week, we've covered it quite extensively here on this channel, but I will just say the three main things. You have the Fed meeting on Wednesday, you have advanced estimates for Q2 GDP on Thursday, and you have major earnings throughout all of this week. If you guys have not seen the earnings lineup yet, well, here we have it. Monday, you don't have anything. So if you're going to make trades, which I'm pretty bearish on a lot of large tech, Apple, Amazon, you know, Google. I personally have puts on Apple because of how the stock has moved up in the last couple of weeks. The risk to reward is really, really good for a downside trade. The premium is pretty cheap. You can get, you know, August 19th, 140 puts on Apple, where it was just there, you know, two and a half weeks ago for, you know, $1.25, you know, 125 bucks. If Apple has bad earnings, it's going to clap the markets. If Amazon has bad earnings, it's going to clap the market. Same thing with Google and Microsoft. I'm not as concerned about Microsoft, kind of concerned about Google and the way, advertising is going in that whole space, something to definitely watch out for. But Tuesday, Google, Microsoft, Visa, Enphase, Chipotle, Texas Instruments, and Skechers report in after hours. Pre-market, UPS, Coca-Cola, GM, GE, McDonald's, Raytheon Technologies. And I think the big story is going to be how is it affected companies and their overseas revenue, the strong dollar. The dollar's been going straight to the moon, and that makes that conversion rate really, really bad for companies that do business overseas. So I think that's going to be a main story of all this, see how that affects profits, and that could hurt, these stocks that do a lot of business overseas. Now, Wednesday pre-market, Shopify, Boeing, Spotify, Waste Management, Sherwin-Williams. Wednesday after hours, Facebook, Ford, Qualcomm, Teladoc, Etsy, ServiceNow, and QuantumScape. Thursday, that's going to be the big day. MasterCard, Southwest, Altria, and Hertz in pre-market. And then after hours, Apple, Amazon, Roku, Intel, Yamaha Gold. That's pretty much it for ones that I will be watching. Apple and Amazon, depending on what happens, coming on Friday, you're going to see a 1%, 2%, 3% move to the upside or the downside, depending how that goes. Apple has joined the list of companies including Microsoft and Google. So all of these companies reporting this week that is slowing hiring and spending for next year. And why that's so big is because when your business is doing well, the last thing you want to do is slow down hiring, slow down spending. So they're joining, the group of companies that has started to do those things, and that's not priced into the markets as of right now. Bad earnings is really not priced in. The earnings estimates are still for 10% revenue growth, 10% earnings growth for 2022, and another 10% revenue and earnings growth for the S&P 500 in 2023. So if Apple is 7% of the S&P and we're not going to get that kind of growth, well, that's a big problem. And I just want to point out something that other analysts have already pointed out that I've heard talked about a lot. Apple was a stagnant business. It really didn't grow much throughout 2018, 2019, 2020, 2021, and the first quarter of 2022 has been very well. So if we start to see a slowdown, well, the valuation on Apple is probably going to have to come down a lot. It's sitting at a 25 PE, with the growth rate that's expected, it probably shouldn't be trading at a 25 PE, whereas something like a Facebook or Netflix is valued substantially lower. So pretty concerned about Apple and Google and Amazon. Really, just to be honest with you guys, I think those were the ones that I would go for a trade on to the downside if you wanted to. Now, on Thursday, we're expecting negative 1.6% GDP. That's going to be important, but it really depends on what the Fed says. The Fed will dictate this market rally or potentially market fall that we are going to see. And why is that? Is because markets are forward-looking. So the markets want to know how long is the Fed going to raise rates, even if economic growth is taking a hit. And given the GDP increase that we have seen over the last 2 years of roughly 5%, I think the Fed would be okay losing 1% or 2% of the GDP to get inflation down. And this is what happened during the 70s. That's why if you look at the federal funds rate chart, we'll actually go ahead and pull it up because, we're just teaching all of this financial education. I have to go to Google actually. Federal funds rate. You could see during the 70s, in the 80s, that's really where they messed up. Really more in the 70s. The Fed started, right, 70s right here. They started cutting rates once they went into a recession, and then inflation did not go down. We're going to add inflation to this. Inflation, sorry guys. Inflation, consumer prices for the US, add data series. So what actually happened here, and you guys can see during the 70s, this is what the Fed did. So the Fed started cutting rates once we went into a recession, and then you can see this red line is inflation. Inflation kept going up. So what the Fed have to do is then raise rates during a recession, and that was bad, prolong the recession, and then inflation did ultimately come down, but then 6 years later, inflation went even higher. So that's really, I think, what the Fed is going to pay attention to, and what the Fed is going to try to avoid this time around, especially since inflation is branching out. That leads me to believe the Fed's probably not going to slow down, but if the Fed does indicate that they're going to slow down, even for a brief period of time, that's going to be very bullish for the markets, and you would want to be careful with any bearish trades you have in your portfolio. Now, I don't think that's going to happen. I don't think the Fed is going to save the day. I think we could be in for an ultimate shit show this upcoming week, and that is the main thing that you guys need to know, the possibilities of what could happen. If you guys want to come trade with me live in real time and keep buying the dip, link down below in the description of this video to do so for that one. Now, let's turn back to AMC stock. We don't have a lot of option activity for this week. Let's go ahead and pull up the options, and you have about 72,000 calls that are out of the money and about 15,000 calls that are currently in the money, about 9,000 puts that are currently in the money as well. So you do have some potential dry powder on the sidelines for some kind of gamma squeeze. It really depends. If people get bullish and they start to buy those weekly options, that would be a very good thing. But let's run through what has happened with the chart as of recently. So we came up, tried to test the $15 level for 3 days in a row, got rejected, gapped up above that, and then we got rejected in between $15. That turned into a support level, just like it should with a healthy breakout. And we were getting rejected at the 100-day moving average. What happened? Well, we gapped up above the 100-day moving average, seen a 7.61% positive day. And then what happened? The 100-day moving average turned into a support level again. We continue to go higher, and then on Thursday and Friday, that's where you seen Thursday was a 3% drop, and then Friday was an 8.82% drop. We did close slightly under the 100-day moving average, but we did retrace back up from the lows that we had seen intraday. So I do think this will turn into a support level, and I do think at least on Monday, Tuesday, those are probably going to be the most bullish days before the Fed, and when we only have really Microsoft and Google earnings, because Google, that's going to be hit or miss, but Microsoft, I think, will be very solid, and that should help the markets be a little bit more bullish rather than not. So by the end of this week, if we do see a bullish reaction in the markets, then I am looking forward to that $20 level. I think this is going to be either a big bullish week or a big bearish week. I really don't think there's an in-between here because of all the information, all the new guidance we are going to get that will really hold weight throughout the rest of 2022. Now, if this is a very bad week, well, you could be targeting $13 to $10 per share. But on a good week, I do think we're heading to $20 per share. Now, obviously, I can't say right now, and to be honest with you guys, it's probably going to be a bad week. That doesn't mean that AMC has to have a bad week, but it's not going to likely, in my personal opinion, be a week where just everything rallies. We're really going to have to see the Fed walk a tight line. We're going to need to see earnings that are better than what we expect, and we're going to have to see maybe only a slight negative print to GDP. That would be the bullish scenario. I think it's very, very unlikely, but anything can happen when you're dealing with AMC, as you guys already do know. The low of 2022 we've seen, I believe that was on June 16th. AMC stock rallied 7-8% that day. So it doesn't necessarily mean that AMC has to fall if the broad markets do. Now, the RSI has cooled down a lot at 54.66, so that is bullish. If you're looking for another move back to the upside, that typically does happen. And the MACD is bullish, starting to go bearish. But we're at the moment where anything can happen. You want to watch the 100-day moving average. If we find support and we can actually be green on Monday, that is going to be a very bullish sign, and that would kind of confirm potentially a bullish rally to come, or at least that AMC is going to hold more strength throughout this very volatile week. So let me know all of your questions, concerns, comments down below in the comment section. Hit that like button and subscribe to the channel. Like I said, if you guys want to come trade with me live in real time, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.